Hello everybody, so this video is entitled Strategy Won't Back Down, and we'll mostly talk about Bitcoin today because I think Saylor didn't buy anything this week. I'll get to that in a second. First, let's talk about Bitcoin. So today we rejoice. I mean, we'll honestly take the win today. This was yesterday's screenshot at about the same time. We're at 84. The day prior, we had dropped to 80,000, 80,600, something like that. So a nice rebound because we hit 37,000 this morning, and in the time for me to take the screenshot, it had gone back down to 86.6. But the point is, we crossed 87,000 on the day today, Sunday, and my guess is that the bullishness is going to continue. My usual source for short-term stuff when it comes to Bitcoin and short-term liquidations is Marty Barty. I recommend his Twitter feed talking about how Binance and the liquidations and the forced liquidations, Binance could liquidate up to 11 billion of Bitcoin shorts by running the price back to 100K. So his short-term take here is that Bitcoin should go back to 100K so that Binance can liquidate the shorts. There's now too many shorts, and I think this makes sense. It's time for Bitcoin to go up. There is pretty much not a lot of longs anymore. So many liquidations, so it's time for the asset to go back up. And I think it will, because it usually drops before the Nasdaq, and I think it will go back up. And over the long term, of course, to me, this is still the best asset to own over the long run. Anyways, let's talk about this past week and what's going to happen next week. I mean, what I think is going to happen. So keep in mind all of the good news we've had for the past 2 weeks, and we've had a lot of good news the past 2 weeks between the China trade deal, the end of the shutdown, the paychecks coming back, the air traffic control coming back to normal, the investments from Saudi Arabia, the Nvidia earnings. We've had so many good news the past 2 weeks, and all of the market did was drop, despite all of the good news. So I don't understand why it's dropping. I think it's because of liquidity issues. I think under the hood, there's a problem with the repo market, and there was a problem with the banks not getting the paychecks from the government for a matter of 5 weeks, nearly 6 weeks. So I think under the hood there was liquidity issues, which meant that no assets were catching a bid. Also, a lot of leverage in the system. Leverage was kind of an all-time high. A lot of people getting liquidated, forced liquidation, triggering new liquidations, etc. Good news. All of the good news we've had has been bad news over the past 2 weeks. But I think we're coming out of that phase. Because we have more concrete things news that are coming up. And I think of two concrete things that are coming up in December. First of all, the end of quantitative tightening in December 1st. The Fed will stop selling off parts of its balance sheet on December 1st. So there will be less pressure in the market as the Fed stops QT officially December 1st. Frankly, we were expecting they would stop it in November, but we have a hawk. We have a major hawk at the Fed, unfortunately, which is here to hurt the markets. That's what he does. That's what Papa Powell does. But anyways, another board member said some positive statements from the New York Fed on Friday, and now the odds of a rate cut for December 10 are high again. 69% chance of a rate cut. My guess is this will increase, and the end of QT. Plus, if we get a rate cut in December, over the medium term, that should be very bullish for risk assets. And we have the wild card. I know this hasn't been discussed in a lot of spots. We don't see this too much discussed. But to me, this is a big wild card. Apparently, Trump is pushing for and I quote, a 28-point agreement to end the conflict in Ukraine by Thanksgiving. And apparently he wants that before Thanksgiving. So even though they don't really celebrate Thanksgiving in Europe, he wants that before Thanksgiving. If that actually was a deal, I think that could be fuel for a rally. Because if you remember 2022, that conflict really cost us a lot of money in the market back in the day. And if there were to be like some sort of a resolution to that conflict, I think that would be very bullish for a risk asset. So that's my wild card. I'll put it in there. I mean, it's good to have a little hope. But keep in mind that, yeah, the good news we've had for the past 2 weeks, the good news has led to a sell-off. And so, who knows? I really don't know. That's the thing. The key is staying solvent. This is what I know. Staying solvent. No crazy leverage. If you play with the DEXs, if you play in crypto, no crazy 20x leverage. And who am I kidding? 20x leverage is like not a big leverage in crypto. Some people do 100x, right? So none of that, right? Staying solvent is the most important in this period. We are in a period where the markets make absolutely no sense. And I believe that is what Saylor is doing. Saylor is staying solvent. Saylor is staying prudent. Hence, the topic of this video, he tweeted, he won't back down. So I won't back down is what he tweeted. And then a day prior, so yesterday, Saturday, he tweeted, did you hodl this week? 77% said yes, implying that he hodled. And so the odds for me are that he didn't buy. You may remember that a few months back, he tweeted some weeks he's just got a hodl, and he ended up hodling and not buying anything. And when he had tweeted that, he had tweeted the dot chart. This time he didn't even tweet the dot chart. So no dot chart in my guess is he didn't buy anything. So that's actually a good thing because in my view, all he could have, because he wouldn't have ATM the common. He's not ATMing on the common stock now because we're like too low. And many of the prefers are trading below par. So you're not even earning like a price to par yield or anything like that, and stretch is not ATMable. So in my view, if he had issued any of the ATMs, that wouldn't have been very accretive. And all you could have probably done, given how bad the markets were last week, all you could have probably bought is like a dozen or half a dozen Bitcoin anyways. So not really economically meaningful for the company. So I think he didn't do it, and I think that's a good thing. I think he should keep the money to raise awareness on Stretch. And that's what he's been doing. He's been, leading a campaign, trying to dispel some of the FUD, like the MSCI FUD, for example. A lot of articles associated MSCI with QQQ, even though MSCI has nothing to do with QQQ. All of the articles, all of the bear articles that I saw on Strategy saying we could lose tens of billions we could have tens of billions of selling pressure come January 15 or something because of MSCI. All of these articles associated MSCI with QQQ. These are two different things. MSCI is the smaller basket. It's the smaller player. And these people just do an article and mix QQQ, which is a mechanistic formula, right? QQQ is a big kahuna, and they're not losing QQQ. But these articles, by association, associate QQQ with MSCI. Like, yeah, if you get dropped from a total world index, who cares? That's not that big of a deal. And the odds are it won't happen. It's just an article piece because Saylor is talking with MSCI. Saylor tweeted about it, etc. Saylor's raising awareness. And the point is, he should keep the money to raise awareness on Stretch. That's also another point that I'm making. You may have seen these ads. Perhaps on my channel you've seen these ads, but he's advertising Stretch, and I think perhaps advertisement raising awareness on this asset is and has perhaps a good return on the money. So if he's advertising on these securities, because remember the business of the company now is to sell Bitcoin-backed securities. That's the business of Strategy. They are a seller of perpetual Bitcoin-backed securities. And I think it's good to raise awareness because I think a lot of people don't know about them. And so if you, and keep in mind, Saylor has an analytics company in the background, right? Analytics, marketing, there may be a way for him to have a very, very good yield on that advertising, to really measure in real time the demand for the product and the ads. So I don't really know how big that experiment is. More interviews, he could do more interviews. Anyways, the point is the best strategy in my view right now is to just hodl, don't be in the news, just hodl and wait for Stretch to get back to 100. Because we know that once Stretch is activated, like it was for almost 4 days, for almost 4 days straight, Stretch was activated. We know that if Stretch is activated for 5 days in a normal market, Stretch could be as high as $1 billion a week. We saw that. We saw an example of that. And I'm very, very bullish on Stretch. So anyways, that strategy is working in the back end. It's just that when Bitcoin hit 80,600, unfortunately, Strategy is losing. And this was always part of the plan. If Bitcoin's not doing well, strategy is never going to do well, and strategy was never going to do well when Bitcoin is not doing well. And if you look at the past 2 months, for example, as I showed in yesterday's video, strategy actually behaved okay because, Bitcoin was down 35%, strategy was down 55%, right? 1.5x. It cuts both ways, and that's how strategy behaved. So anyways, I'm pretty bullish. But as always, this is not investment advice. This is not financial advice. This is only entertainment. I am an entertainer. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me next. Thank you for watching and have a wonderful, wonderful day.